The VA loan is a phenomenal loan product. So now if you had the pleasure of using the VA home loan, there's some additional treats in store for you, which is what's called an interest rate reduction refinance loan. It's a streamlined refinance basically, and it's phenomenal because it allows you to drop an interest rate on your VA home loan with relatively little to no work, no appraisal. You just need to verify a source of income. And then also you could add and remove people from that during that process of an interest rate reduction refinance loan. So I'm going to cover all of that in today's video. Now, another cool part to that if you do an interest rate reduction refinance loan, it doesn't make a difference if you turn that VA home loan into a second home or an investment property. You can still take advantage of the lower interest rates because really occupancy is not going to make a difference for the rate. So that being said, obviously there's a ton of positive stuff, but the thing is you have to understand what are some of the downsides to it. And right now we've been getting a lot of calls from clients, past clients, saying that, look, I got this letter in the mail, I could save money on my monthly mortgage payment. But a lot of times I've been looking at these and they just absolutely do not make sense right now. Just because when you save the minimum amount required, which is 0.5% on the interest rate, the fees get rolled into the mortgage, basically ticking up that mortgage balance, number one. And then the other part to that is they also reset the clock for the 30 years. Right, so the way that you want to be able to look at that is going to be breaking down the cost and how that works. Now, another caveat is that with the VA funding fee, they do charge with 0.5% for the VA funding fee. Now, if you collect a 10% or greater VA funding, VA disability compensation, then you don't pay for that. Now, when you originally, let's say, did your mortgage and you were charged a funding fee because you didn't have the service connection. Now that you've gotten it, then you are able to refinance without it. And just know if you've already started the process on your VA disability compensation and you do an IRRRL, get charged the fee, and as long as the rating is backdated prior to closing on your VA home loan, then you can get a refund from the VA for that refinance. This also applies when you purchase the property. So keep that in mind as you go through this process. So now let's talk about closing costs and what really goes into them. So lenders charge origination fees. They also charge discount points, which, technically they could charge up to 2% in discount points on these loan products. The VA does have something in place to help protect veterans from equity stripping, which is something that was done by a lot of big mortgage companies that got sued for that. This was a while ago. So the VA basically came out and said that when you close on a VA loan, right, it doesn't make a difference if it's a cash out refinance, you purchase the property, that you have to wait a minimum of 6 months from your first mortgage payment, and you can't pay ahead of time because it's going to be based on your closing date. And then your payment's going to be based from there, your first payment date. And then you also have to wait 210 days from that first mortgage payment to actually close on the mortgage. So they have that little caveat in there. Now, the other part that they protect you with is that one, like I mentioned earlier, is the rate has to drop at least 0.5% in order to qualify. The other big one is that you can't have, how do I explain this? There's 36-month recoupment period. Basically what that means is that if you save $100 a month on your monthly mortgage payment, closing costs or the fees can't be more than $3,600. Which makes sense, but that takes a 3-year recoupment period. And again, remember, you're refinancing at a higher balance because they're rolling in the closing costs. So you got to really make sure, does it make sense for you to do that? One thing to note with calculating how to calculate what that payment is going to be is I always look at the interest associated with the loan. So let's say you have 25 years left on your mortgage. So basically what you would do is you want to figure out how much remaining payments and interest you have left on your mortgage. And then you're going to take the new mortgage, and same thing, you're going to take the 30 years or 360 months times your monthly payment. It's going to show you how much total interest you're going to be paying. So obviously you want to be paying less. That's why when people are like, well, I want to refinance into a lower rate, does it really make sense from a financial position to be able to do that? Yes, it's exciting to get lower rates. Well, listen, when rates dropped to 2.25, yeah, it totally made sense to refinance because people dropped like 2, 3, 4, 5% in payment, in interest, which greatly affected their payments. 0.5% isn't that much, maybe on like $1.5 million deal, but again, it's really going to be subject to your finances and what they look like and what state you're in, because closing costs are going to vary based on the state. In some states, it's as little as $1,000 to refinance. That's like, I'm talking hard costs like title fees. A lot of times, lenders will charge origination discount points. We don't. So if you're interested, please feel free to schedule an appointment with us. Happy to walk you through it and tell you if it makes sense or not. We've had viewers reach out, and a lot of times you just tell them, like, look, you're in a good spot. Yeah, you got some solicitation in the mail, and it just didn't make sense. So we want to make sure that whatever you're doing makes financial sense for you and your family. Because all that is going to make an impact on your affordability, how you live your day-to-day life. So again, if you guys have questions, please ask us. Another piece with that too is with closing costs being rolled in, the max you can get back at closing is $500. Now that is kind of tough to be able to automatically predict how much it's going to be. That's why you see the loan amount shifting so much as you go through that process. Another thing that I want to mention is that, like, let's say, I'm going to use example. I love Florida, but they definitely have the highest fees for a reason. It's because you have to pay transfer taxes just like you did when you bought the home on a refinance. So again, if you're adding $10,000 to the balance, does it make sense to do it from an overall cost perspective? Now, let's go through some of the nuances and what lenders actually need in order to make this happen. So I've mentioned you 6 on-time mortgage payments, 210 days from your first payment date. So basically after the 7-month mark, you can close on your property. The rate has to drop 0.5%. The only exception to that is when you have an adjustable rate mortgage and you want to get into the fixed rate. We talked about the 36-month recoupment period, which basically you want to be able to cover the closing costs within that time frame, the 36 months. But again, we obviously would like to see it a little bit lower so you could take big advantages of that VA home loan. Another key component to this is that when you do the interest rate reduction refinance loan, and I'm going to give you an example. Let's say the original balance was $500,000. Today, it's $400,000 and you do an interest rate reduction refinance loan. You still have $500,000 of your entitlement locked into that property. You do not free it up when your balance goes down and you refinance at the lower balance. It could be you could have a $500,000 original price, and today you refinance for $100,000. You still have $500,000 locked into that property, which again makes a significant impact and difference for you when you're looking at that mortgage and the factors that go into it. Now, I'm going to explain to you guys what type of parties, obligations of people can be added to a interest rate reduction refinance loan or not. Another thing that lenders can do as well, I didn't mention this earlier, is that you can actually do a soft credit check in order to do an interest rate reduction refinance loan. So it doesn't even require you doing a full credit check, which I think is awesome. And it definitely lends itself to a lot of opportunities, right? So now let's talk about your current, or let's say your prior situation and your new current situation. Is it possible to do an interest rate reduction refinance loan? So let me walk you through it. So if you're a veteran and you originally purchased the property by yourself, but now you're married and you want to do an interest rate reduction refinance loan. So yes, you can add your spouse and still be able to do an IRRRL. I'm gonna back up 1 second. One thing I didn't mention is that the source of income is the only thing that you need to verify to do the IRRRL, right? So they look at your credit, they look at the middle score, they're going to look at do you have a source of income? So you can have $1 million place, 10% service connection, and they will use that 10%, maybe like $170, to actually qualify you for that entire $1 million property. So it's just a source of income. So it's pretty straightforward to do these. And that's why I think a lot of lenders like doing them. So let's talk about if a veteran and a spouse are on the mortgage, but the veteran is going to be on their own because they received a divorce. Yes, the veteran can do the loan, an interest rate reduction refinance loan. I'll just start saying IRRRL for now to make life easy. In order to be able to refinance and do that and basically remove their spouse. A veteran and a spouse, but they got a divorce and now they have a new spouse. Same thing. You can do an IRRRL. So it makes it pretty cool. So we have a veteran and a spouse. The spouse alone, because the veteran has passed away, yes, you could do an interest rate reduction refinance loan. A veteran and a non-veteran joint loan that was originally done. The veteran alone can refinance with an interest rate reduction refinance loan. Now let's talk about the things that you cannot do. So a veteran and a spouse where the divorced spouse alone is on the mortgage, they cannot do an interest rate reduction refinance loan. A veteran and a spouse where you have a different spouse alone where the veteran has passed away, no, you cannot do an interest rate reduction refinance loan. And then you have a veteran and a non-veteran joint home loan obligation. The non-veteran cannot do an interest rate reduction refinance loan. Hopefully you guys learned some good stuff today. You have questions, please feel free to reach out to us. Drop a comment down below. Always happy to do videos around the things that you guys are interested in. So I'll catch you guys soon.